What's up everyone, Brad here with the Money Dad channel. In this video I want to talk about Apple. They just had an earnings call. The stock is down in after hours, but I see a lot of upside here and I want to show you where I see that upside, why I see it. It's all part of a chart pattern that I'm tracking here. This is technical analysis in this video. I'm not going to get into the numbers of the earnings call or the fundamentals in this video. It's not what we really do a whole lot of on this channel. I will be getting into the chart and a pattern that I see on the chart, the technicals. So let's jump right into it. So if you're watching this video, there's a good chance that you own this stock, all right, and you're looking for some confirmation on, hey, should I buy or sell, or what's going on after this earnings call. Well, in this video I'm going to be showing you kind of the positive side, what I see here for the upside potential for the short term. So if that's something that you want to stick around for, please do. All right, so let's get into it. When I pulled up this chart, I was looking at a very recent chart pattern right here, these three blue lines, and I saw a breakout out of this kind of a pennant pattern to the upside, and then we started breaking down and it kind of invalidated this breakout that was supposed to go to the upside. And I was trying to wrap my head around what happened, what went wrong. Then I realized that there was a bigger picture that I was not considering as we zoom out, and I needed to kind of just get rid of these three blue lines here, kind of get rid of that chart pattern to be able to see better what was happening. So when we zoom out, and this is looking at the last almost 2 years of data. Really it starts right here though, so it's more like a year and a half, about a year of data. So this is a big chart pattern that's been going on for a while. Okay, this is a consolidation pattern that we've been in after a huge run up from the lows of March of 2020, right? The kind of the crash back then. So I had a huge run up into September of 2020, and then we've been consolidating for a while, and we finally got a breakout in July of this year. And then we got all the way up to our all-time high. What was that? Looks like in that 156 area, maybe somewhere around that range. And then we started to pull back to this orange line, or maybe it's a yellow line. Apologize if I got that color wrong. I'm not great on my colors. Didn't learn that in school. So we pulled back to this line right here and bounced right off it and headed back up to the upside. So I see this as a test of support, right? Because we had this consolidation pattern before, after this huge run up. So this consolidation pattern, this orange line, I'm just going to call it orange, acted as resistance for a while, right? We had resistance right here, and then right there, and right there, and right there again, until we finally broke through. So that line in the sand, that $138, was strong resistance for a very long time. And then when we broke through it, and that line ended up underneath us, that now is support. Right, that $138 range, once it was underneath the stock, that resistance turns into support. So of course when we come down here and we test it, it acts as support. We bounce right off of it and head to the upside. So this is a good look for this chart pattern. All right, so we're kind of bouncing around in here, breakout, bounce off of our support, and we should head back to the upside if this chart pattern plays out the way that it should. And we can measure how much to the upside as well. So I can get a price target based off of this chart pattern. Okay, so when we look at this earnings call that just happened, when you guys are seeing this video, it might be yesterday or a couple of days ago or something like that. But I'm talking about the earnings call that happened on 28 November, and they hit earnings, but they were a little light on revenue from what I'm reading. I won't get too far into it because I want to talk more about the chart and the technicals, but it does look like in after hours this stock is going to drop. After hours just closed at 8 o'clock Eastern, so that blue line just came off the screen. But in after hours, I think we were around like 146 to 148, somewhere in that range. So we're going to drop a few dollars, at the open tomorrow, unless something significant happens in the pre hours tomorrow morning. But we're going to drop, and I see that as a buying opportunity because I really see this stock going much higher. Like I was saying, this chart pattern gives me a target to the upside that's pretty significant. So let me measure that out for you guys to give you that price target. And what we do is we just take the widest part of this kind of wedge or triangle, whatever you want to call it. We're going to take the widest part, right? The bottom, the first kind of touchdown, all the way up to the top, right? So we can see. Let's zoom in on that area over there. Zoom in a little bit better, get a better idea of what this price range is. It looks like it's about $103 at the bottom, and then we know our top is 138, right? So 103 to 138 is a $35 range, right? So $35 is the kind of height difference between the bottom and the top of this range. So we're going to take that $35 and we're going to put it right on top of where the support is, and that's going to reach our target, right? So you take our $138, and we're going to squish this down so that we can get kind of like a good visual of it. So we start our $35 difference at the support. If I can get it, let's just put it over here to make it easier. So we're going to measure up $35. So we're going to come right around here. And we're going to get $173, maybe $172, somewhere in that range, right? So we're looking at $172 to $173 as our target to the upside on Apple. So when you see this stock pull back because for whatever reason Wall Street didn't like the revenue, was a little light because of iPhone sales or whatever, to me personally, I'm brushing that off. I see really good upside, 172, 173, that's $20 of upside on a $150 stock. I mean, that's pretty good upside for a stock that is so stable, right? There is so little risk in this stock. This is almost like holding cash. It's so there's so little risk in it, right? Kathy Wood of ARK Invest literally uses Apple as their cash position when they're trading stocks. She's said that publicly. It is that stable and low risk. So when you have a stock that is that low risk and you have a trade setup on it that has significant upside potential, those are two things that I really like to see come together. Okay, so that's what I've got for this video. I wanted to make a quick one for you guys to get that price target out there and kind of the reason, why I have that price target. One thing I would caveat with this is, speaking of risk, right? If it breaks down under this 138 range, that's probably where I would sell. That would be my get out, because that kind of invalidates the pattern at that point. Kind of like in the beginning of the video, I had a smaller pattern charted out, right, and it broke down. Once it breaks down under this orange line, that's the end of the trade. It's done. It's no good anymore. But until that happens, I see 172 as a short to medium term upside potential on Apple. Okay, guys, let me know what you think down in the comments. Do you like this setup? Do you think I'm off base somewhere? Do you like Apple? What did you think about the earnings call? Things like that. Love talking stocks down in the comments below. Okay, guys, thanks. I'll see you in the next one.